Hey everyone, today we've got a fascinating topic lined up for you. Just take a look at these photos. Dubai 30 years ago versus today. It's hard to believe it's the same place. The country has advanced like a rocket, but unlike anything in space, Dubai has a clear goal: stability and success. So how does the land of sheikhs attract investments from around the globe? What path leads to success? What should you focus on? And most importantly, what mistakes do you want to avoid? Let's dive in. Welcome back to our channel. I'm Marcel and this is Garant Business Consultancy. Let's get started. First things first, if your net income exceeds 375,000 dirhams, you'll face a classic tax rate of 9%. It's like they added a percent for every planet, though Pluto has been demoted. But honestly, even complaining about it feels like a little bit out of place in the Emirates. That said, there are some exceptions that let you enjoy a zero tax rate. Let's talk about one of the most appealing options: free economic zones. What are free economic zones? They are special areas where the government offers various incentives for businesses. These zones pop up all over the globe, including the Arctic. But in the UAE, they are particularly enticing for foreign investors. You could say they're like cats, sensing where the tastiest treats are hidden. However, here's the catch. The magic really works only if your business operates within the zone. For example, if your office and warehouse are in the free zone, all your transactions need to be within the partners in that zone. It's like playing a business simulation game where you're only trading within your trusted circle. In essence, these free zones are tax havens ready for you to thrive. But step outside and reality will hit you hard. Now let's get technical. There are 13 types of qualified activities you can pursue in these zones, and they come with some perks. If your business is in the free zone and demonstrates a real economic presence, meaning you have actual operations and employees, you could be tax exempt even beyond the zone's borders. Most companies work on a B2B basis, meaning they sell goods or services to other businesses, not directly to consumers. For example, you might set up a headquarters company which manages subsidiaries, a brain center for a group of firms, or a treasury which concentrates solely on managing cash flows within the group. Here is the kicker: distribution can also provide zero tax benefits, but it must be carried out in designated zones. So, to keep enjoying these benefits, you will need to meet a few conditions. Real office, no virtual address allowed. Employees, you need enough staff so it doesn't look like you're just operating from your kitchen. De minimis rule, your non-qualified activities must be less than 5% of your net profit. These regulations ensure the zones remain as tax-friendly as they should be. No sneaky tax evasions allowed. Now let's take a tour of the Emirates. There are several designated zones, each with its unique customs regime. They're basically fenced-off areas known as transit zones. For example, Jebel Ali zone is a gem of Dubai, located next to the region's largest port. It's bustling with nearly 10,000 companies, including those of the Fortune 500 list. Then there is Dubai Airport Free Zone, right at the airport, handling everything from aviation to cosmetics. And don't forget DWC, which is part of the massive Al Maktoum Airport. Just check out the size. Other key zones include the Free Trade Zone in Al Quwain and more in Ajman and Ras Al Khaimah. One of the oldest free economic zones is located in Ajman, established back in 1988, right around the time when Michael Jackson first stunned the world with that iconic lean. If you've ever tried to pull off that move, drop a comment below. This zone is conveniently situated close to the seaport, and it's just a stone's throw away from international airports, making it super accessible for businesses. But that's not all. In Ras Al Khaimah, the northernmost emirate, there is Rakes, which boasts 5 different parks: business, industrial, technological, aviation, and even a scientific zone. Each of these zones isn't just a spot on the map, they're strategic hubs, each with its own benefits, conditions, and opportunities. So, before you make a choice, it's vital to dive into the details. Remember, this is the whole new world you need to understand to make the most out of it. And speaking of making the most out of opportunities, let's talk about support for small businesses. The UAE recognizes that small companies play a crucial role in the economy. That's why they've introduced a fantastic benefit called Small Business Relief. If your annual turnover is less than 3 million dirhams, you might not have to pay tax. That's right. If you're just starting out and growing your business with modest income, you could be exempt from the taxes. And here's the best part. This relief extends all the way until December 31st, 2026. So if you opened your business before January 1, 2024, you have 3 full years of tax-free operations ahead of you. It sounds like a dream, but this is the reality in the Emirates. This program is designed to help small businesses and their footing and generate stable income, which ultimately benefits both the entrepreneurs and the nation's economy. Now let's talk about some savvy strategies for minimizing your tax burden. Just a few clever tricks that some in the Emirates employ. But I must clarify that these methods work specifically for tax groups. A tax group is where affiliated companies owned by a single shareholder can combine their resources. So if you own several businesses, you can merge them into one tax framework. The best part? You can offset the losses from one company against the profits of another, making it a smart way to optimize your taxes. Now let's explore how to navigate the fine line of compliance effectively. Imagine this: you're a CEO with a salary of 100,000 dirhams a month, plus bonuses of 50,000. Sounds great, right? But what if your company's net profit for the entire year is only 3 million? That salary is clearly way above market norms and could raise some eyebrows. That's where the arm's length principle comes in. You have to prove that such payments reflect market conditions. This means you can't just say, "I promise." Your salary cannot exceed that of top executives in the similar companies. To do this, you'll need to pull market research or reference registries that document typical rates. Additionally, you can distribute expenses as bonuses on top of these base salaries. But remember, those need to be indexed properly according to the arm's length principle to avoid any issues. And let's touch on something essential: transfer pricing. This principle states that if companies under the same ownership transact with each other, some transactions must reflect market value. Picture this: a company in the UAE buys a product overseas for 100 dirhams. Ideally, they should sell it for at least 150 or 200, but instead, they sell it to their affiliated company for just 105 dirhams. That's where transfer pricing rules come into play. These rules require thorough documentation for transactions between affiliated entities to prove they are conducted at the market price. It's called transfer pricing documentation, or TP documentation for short. Independent auditors prepare this, affirming that transactions match market rates. It's a mandatory part of your annual tax filings. Now, I know this might sound complex and intimidating, but remember what Hamlet said: to be or not to be. You do not have to navigate this world alone. If you need guidance, check the description below to book a consultation with us at Garant. We are here to help businesses avoid costly mistakes and ensure you are on the right track. And don't forget to tell me in the comments, did you try to recreate Michael Jackson's famous lean? Also, which free zone you are interested most? That's it for today. This is Marcel, and I'll see you next time. Bye bye.